Attention wealth management firms, financial advisors, and family offices. Do you manage the assets of accredited individual investors? Do you have a more aggressive, long-term fixed income investment strategy for 2025? Would your investors appreciate fully amortized investment opportunities with 10, 15, 20, and 25-year terms? Would your investors appreciate a fixed conservative rate of return that, depending on the investment, ranges between 6.25% and 9.5% APY? Would your investors appreciate non-securitized, passive, direct participation in commercial real estate investment opportunities that offer excellent returns? Now, have you noticed all the coast-to-coast commercial real estate development and construction that's going on? It's true. We are surrounded by thriving commercial real estate properties of all sizes and types. You see office, retail, industrial, self-storage, assisted living, mixed-use, and multifamily properties everywhere. Commercial real estate developers and builders create these income-producing properties to accommodate long-term commercial and residential tenants. These experienced development and construction professionals used to be able to finance their projects using their local banking and lending relationships. However, the local commercial banking and lending landscape is constantly changing. So commercial real estate development and construction loans are less broadly available than they used to be. This has left many commercial and residential builders and developers with permissible, marketable, profitable projects that need acquisition, development, and construction financing. Your investors can capitalize on this. But how? You can talk to Builders Commercial Capital Group, or BCCG for short, about our passive, long-term, privately placed commercial real estate note investment opportunities. BCCG is a commercial mortgage firm that exclusively represents commercial builders, developers, and construction companies that design and build long-term income-producing properties like office buildings, retail shopping centers, industrial parks, convenience stores, self-storage centers, senior housing facilities, and apartment communities from coast to coast. Of all the commercial real estate investment opportunities available, multifamily housing is by far the greatest and happens to be a considerable part of BCCG's upcoming loan portfolio for 2025. Builders and developers can hardly meet the demand for affordable, fair market, middle market, high-end luxury apartment residences, assisted living communities, and large-scale apartment complexes. This has put BCCG in a unique position to bring these profitable real estate development projects to the private investor marketplace as alternative investment opportunities worthy of consideration. As these properties are built and rented out, a portion of the rental income is encumbered, collected, and remitted to the commercial real estate note investors every month. Private mortgage investors are note holders and not beneficial owners of the subject properties. As such, they are secured in a first lien position and contractually entitled to fully amortized monthly principal and interest payments before taxes, insurance, and developer profits. These commercial and multifamily real estate development construction projects have capital requirements ranging from $1 million to $150 million. However, BCCG uses commercial real estate loan syndication to efficiently and expeditiously raise the capital necessary to complete and stabilize these commercial real estate acquisition, development, and construction projects. Syndication divides a commercial real estate development and construction loan into smaller mortgage shares called loan participation notes, or LPNs for short. In private, non-securitized commercial mortgage banking, loan participation notes, or LPNs, work similarly to collateralized mortgage obligations, or CMOs, in the commercial mortgage-backed securities markets on Wall Street. Syndication allows multiple investment firms and family offices to co-invest in a commercial real estate note by acquiring measured, risk-adjusted stakes according to each investment firm's criteria, parameters, and preferences, which will obviously vary from firm to firm. A significant commercial real estate loan investment for a $100 million project can be easily divided into 200 syndicated loan participation notes at $500,000 each. Then, for example, 20 wealth management firms or family offices can each purchase 10 syndicated loan participation notes, equaling a $5 million investment per firm to satisfy the project's capital requirements, thereby ensuring BCCG can fund and close the loan as scheduled. The interest rates charged to developers are based on a fixed rate ranging from 100 basis points over the current SOFR rate to 100 basis points over the current WSJ prime rate. This means that depending on the geographic location, multifamily or commercial real estate market, project scope, scale, size, and capital requirements, the APY on the commercial loan participation notes offered by BCCG can easily range between 6.25% and 9.5%. Any feasible commercial real estate acquisition, development, and construction project can be originated and underwritten by BCCG. However, BCCG's projected loan volume, based on commercial property type, will be made up as follows: 30% for multifamily, 13% for senior housing, 10% for office, 5% for industrial, 3% for hospitality, 12% for retail, 4% for single tenant, 10% for residential investment, 2% for self-storage, 2% for special purpose, 3% for healthcare, and 6% for mixed-use properties coast to coast. The rental income from the subject properties is encumbered first and foremost for the repayment of principal and interest to the note investors off the top, along with taxes and insurance, the PI/TI coverage, for the life of the note. Investment summaries for each project will include information about the developer, the project management firm, the market valuation, the market feasibility, the scope and scale of the project, the financial projections of the project, the proposed note investment terms and conditions, the exit strategy, and the supportive loan documentation. As a commercial mortgage banker, BCCG sells loan participation notes to finance the underlying commercial mortgage banking transaction, which a local title company handles using loan closing documentation drawn up by a commercial real estate attorney. BCCG offers loan participation notes to wealth management firms and family offices as private placements under the registration exemption promulgated under Rule 506D of the Securities Registration Act of 1933. Every syndicated commercial real estate development and construction loan note sold offers fully amortized loan repayment terms that favor the investors, with investment terms ranging from 10 to 25 years. BCCG's commercial mortgage note investments are an excellent fit for investment firms desiring long-term fixed income investments. They offer 120, 180, 240, or 300 uninterrupted monthly payments. BCCG engages in the origination, underwriting, and closing of RESPA-compliant commercial real estate loan transactions, acting solely in the transactional capacity of a commercial mortgage banking firm. That's all we do. BCCG does not offer or operate mutual funds, hedge funds, pooled investment funds, limited partnerships, joint ventures, REITs, or equity participation structures. Additionally, mortgage investors invest in the note itself. No joint venture, stock purchase, or silent partner stipulations are required. When BCCG presents an investment summary for investor consideration, the participating family offices or wealth management firms execute a letter of intent subject to that firm's internal due diligence review. Once a firm completes its due diligence review, it can execute a commercial real estate note investment participation agreement. Under the executed agreement, the investment firm will receive escrow deposit instructions from the title company for funding and closing the loan. Additionally, because of the construction-to-perm structure of the underlying commercial mortgage loan offered to the builder, there will also be an interest-only period for a maximum of 3 years before the fully amortized loan repayment term goes into effect. BCCG offers investors a higher rate of return during the project's construction and stabilization phases, with a margin of an additional 200 basis points in interest-only payments, compared to the lower amortized rate in the note's upcoming permanent term. For example, the 3 years required to build and stabilize a multifamily construction project will have an 8.25 to 10% APY and an interest-only loan repayment term before the amortized note term goes into effect. The note's fully amortized, 25-year permanent term will then go into effect at a fixed rate of return between 6.25 and 8% APY. Thus, the total overall note term would be 28 years combined. Your investors will appreciate the tangible credibility of seeing their investment capital being put to work before their very eyes. Your investors will also appreciate that BCCG uses 4 independent fiduciary relationships and resources to manage their capital. 1. BCCG uses a local escrow and title company to serve as the escrow agent and trustee of all note investment funds, deposited and held in escrow for the funding and closing of each loan. BCCG has no access to or control over investor funds deposited and held in escrow. 2. BCCG uses an independent construction loan administrator to oversee the disbursement of the investor's note investment funds that will be advanced to the project on a monthly schedule, provided by the developer to BCCG. 3. BCCG uses an independent construction site inspector to make random site visits between each disbursement to audit the previous disbursement's appropriation for materials, labor, and on-site project management. The construction loan administrator's site inspector will provide an inspection report containing photos, videos, checklists, and site review notes to BCCG and the title company, recommending the authorization of the next disbursement based upon the developer passing the site review with a 95% audit score or better. 4. BCCG uses an independent licensed, bonded, and insured loan servicing company, which will be charged with the sole responsibility of collecting the monthly rental income from the property management company and promptly remitting it to the note investors every month. This is only a brief introduction to BCCG's passive, direct participation in long-term commercial real estate acquisition development and construction loan note investment opportunities. More detailed information is available upon request by visiting our website and completing an online opt-in form. Then, a downloadable information packet will be immediately available. The introductory packet will contain information about Builders Commercial Capital Group, our underwriting criteria, typical investment scenarios, and the various note investment options and available parameters. The information packet will also introduce our strategic relationships, independent affiliates, and collaborators, such as our real estate attorney, the title company, the construction project estimator, the construction loan disbursement administrator, and the loan servicing company. Investment firms that have completed the opt-in registration form will be granted immediate access to review actual investment summaries of upcoming long-term commercial real estate projects for investment consideration. The investment summaries will describe the project itself, its market, its feasibility, introductory information about the developer, the project team, and the exit strategy, and provide links that will give access to view the plans, permits, appraisals, loan documents, title work, and copies of every other due diligence exhibit available for your review. Grab a pen and jot down the web address that will soon appear on your screen. It will take you to our landing page where you can download the investor packet as mentioned earlier, read FAQs, view typical investment scenarios, request opt-in access to view investment summaries of upcoming projects, and book an appointment to speak with our investor relations manager about working together to give your investors significant returns. Thanks for your time today. We look forward to working with you in service to your investors and contributing to your company's continued growth and success.